Good morning, everyone. How's everybody doing? Had a good weekend? Good, good, good. See the whole crew's here. Okay. Well, pretty much normal business after the big sell-off on Friday, which is good to see. We had big, massive, couple hundred points down. Looked underneath 73.91. Popped back up, but the overnight, the close, the last hour we closed down here at 73.68. Now, interestingly enough, in the Globex session, we did a look below and fail of the previous day low, and we did a look below and fail of 73.91 all the way up to 74.23. Not a bad trade. If you had, I said yesterday in the room, I said it's okay to go long over 91 short-term trades, 91 to 24. That's not bad. It's 25, 30 points. But this bid is going to get tested. The other thing is we have a poor low in the overnight. Now, a poor low, market profile people have very fancy, um, confusing ways of describing a poor low and a poor high. A poor low and a poor high just mean two simple things. A poor low means buyers are competing and there's not enough selling size. It's not selling pressure, it's size. So when you come to that poor low, if the size sellers look at that low and underneath it they see a lot of buyers, they're simply going to raise price because that's how commerce works. So a poor high is the opposite. That's when everybody piles in and sells and price competes. So it's sellers competing, prices get pushed down. Buyers show up and start compete, prices move back up to take advantage, right? Would you say we have outside selling? Yeah, I mean, that whole inside outside thing is kind of like 1980s, right? Once again, we got to remember that most of this market profile stuff has been written 40 years ago, 30 years ago, and a lot of it doesn't take into account how the business has changed. This whole thing now, all ES is speculative. The thing is, they're large, like if you have $200 million and you got a little fund, that is a little fund. That's a small partnership, right? So there's a lot of these 100, 200, 800, $700 million players. They trade size and it's all speculative, right? So the concept of outside selling, and it's a good question, Trader M. Outside selling is when an investor sells like Microsoft because there's a material change, right? 90% of the liquidation in these markets is created by speculative money, right? Outside could mean swing, right? Trademaker, outside selling is an old, antiquated term, which means investors are selling. So if I own 200 million shares of Apple, right? And Apple comes out and says, you know what? We're not making iPhones anymore. We're selling cotton candy. That is called a material change, which is going to affect its earnings. And since I'm holding the stock for 30 years, Now they're no longer making electronics. I'm going to dump the stock. I am an outside seller. Inside selling just means the day-to-day rotation of inventory. Okay? The markets, because the ranges are so big, that because of the large speculative nature of these markets and the amount of cheap money there is, that there is really not that much outside selling in a futures market. Let's go take a look at NVIDIA. Right back down to that 203 that I was talking about. So look above eval. The cost basis is here at 196. So if there was outside selling in NVIDIA, this is just an inventory correction. If there was an outside seller in NVIDIA, we would be under 179 on Friday, right? If there are outside sellers in stocks like, let's go look at Apple. That's not outside selling. That's just a little bit, right? Well, yeah, it's just the buyers get scared, the sellers price compete, and markets go down, right? There are buyers, but they realize, trade maker, like when you know something, if you know a seller is desperate, you're still going to be a buyer. You're just going to drop your price quite a bit, right, to take advantage. See, the problem with trading is we've taken it and we've gotten so far away from the concepts of simple commerce, right, that people don't understand that this is just an inventory correction. This is when sellers go, oh God, I'm selling, Moran's selling, trade makers selling, Raj is selling. I'm going to lower my price, and then the buyers see that and they go, okay, these guys are lowering prices. Let's lower the prices that we're willing to buy at. So if Apple had outside sellers, we'd be down to 273 and then 255 very quickly. Now, when you look at the positioning of companies like Nvidia, Apple, etc., right, you'll realize that the majority of those markets and those shares are held by trillion-dollar institutions that do not sell stock. Okay? Like Nvidia, if you look at Nvidia has 23 billion shares in its float, which means 23 billion shares available for trading. Okay? Of that 23 billion shares, 71% of that is held by investment firms who are trillion-dollar institutions. Like BlackRock's got 2 billion, Vanguard's got 1.5, State Street's got 1 billion, Fidelity's. These guys have so much stock, they can't sell it. If you tried to sell 2 billion shares of Nvidia, you'd all in one day, you'd knock the stock down to 50 cents, right? Right? The thing only trades. It only trades 166 million shares a day on the 10-day average, right, or a 3-month average. So there's no way you could sell 1 billion shares in one day, right? So that is because these companies are holding that stock for 2 decades, 3 decades, 4 decades. Long after the fund manager is dead, that company will be holding that stock because it's an investment in the future, pension funds, retiree funds, right? Yeah, they can't buy anymore because they have a corporate charter that limits their concentration. So, but the thing is, so all of this up and down is speculation, right? I've done a video and it's on YouTube and you guys are welcome to go look at it. And it's why markets always hit new highs after a sell-off. Because what the sell-off does is it accomplishes two things. When you sell a market off, what happens is you flush out all the spec week longs. You flush them out. You come into a cost basis, right? You flush all that out. The short sellers come in, wholesale traders come in and buy, then we come in and buy, and then the dumb money shorts who short here, they come in and this gets pushed up. You can see it happen right here. Move up, move down. So the first people to come in and buy was the smart money shorts who were covering. And then wholesale put a position on top. We came in, and the dumb money shorts who shorted here and here, when they realize they're screwed, they go to cover and boom, all the supply is gone, right? This is nothing new. This has been happening since the 1800s. Commodore Vanderbilt used this exact mechanical business model to squeeze Harlem Railroad to $1,000 a share. And he did it running it out of an old cigar box. So that's the technology he had. He had slips of paper that he kept in his cigar boxes. That was his technology. And a pad of paper that he would write down prices. Okay? And he was able to move that stock pretty much to $1,000 a share using the exact same things. Now, these short squeezes aren't deliberate. They are caused by how human beings behave. But nothing has changed in hundreds of years, right? It's always the same sequence after a sell-off. So what's going on now in our markets, right? We looked below it and failed. We came down, right? All of the inventory that was bought on Friday they're getting rid of it above 73.91. Let's see what happens when London opens. And we'll see the overnight point of control was here. Now it's moved down. They have to buy position, right? When the market's coming in, it doesn't say where, but they do buy. They have to buy because they're a liquidity provider. So when they come in and buy, right, there's the 5 p.m. close. Anything that was bought down here Friday, right, they give it a little flush, double bottom, pour low, and look at beautiful distribution above 73.91. They had the point of control up here. Now it's moved down because we've got a little bit of selling pressure, right? Here's our 1 minute candle chart that shows our cost basis. I use 7400 to 7411, double it to the top to 31, double it to the bottom to 7380. And if you doubled it again, it'd be 7340, 39 down there. So you can see liquidation, position, position. And notice, if you look at this, this is beautiful algorithmic trading because you've got a liquidation, right? The short's a bid, wholesale builds, push up. On liquidation, look, it comes right back. So had you gone and drawn our little boxes, right? Say you went there, boom, okay? See how when we came in, right, we distributed? Came back in, stopped, see? Caught a bid, moved up, little distribution, back up, down, and look where we just came to. We just came back to where we stopped before. See, it's very clear. Very clear. Hey, Jury, how you doing? Right? It's very clear. So we're still in distribution, you know. The point of control from Friday is here, right? That's good. The scalping is a beautiful thing, you know. Like I was writing in the room earlier, scalping does two things. Number one, it allows you to understand if you're going to put on a big position, you know where the sellers are, you know where the buyers are because of your scalping, right? I mean, if you're scalping intelligently, you're not just buying and selling randomly, right? Like say you were long, say you bought 7401 and you know there's a seller at 7402 and 3/4. If the market lifts over 2 and 3/4 and prints 3, 3.5, 4, then you know they're buyers, right? That's one thing. So the scalping keeps you, it allows you to have a good tactical understanding. See how they raised the price? Right? So there's buyers there. So London comes in and opens and there's nothing for sale underneath 7400. right? Your next stop is going to be 5 3/4, and then if that holds up, 7.5. And then these two candles have the exact same top, so that's where the sellers have stepped in. Very, very similar. Can you guys hear me? Hello? Hello, hello? I've been talking for a whole half hour, almost no 45 minutes, and nobody said that, so I'm so, can anybody else answer? Raj, can you hear me? Trademaker, Jerry? Okay. Thanks, guys. Okay, so Miranda, there's obviously something wrong with your internet or your YouTube. I don't know what's going on. YouTube might have a little bit of the Monday morning blues. I don't know what's going on. Sorry, guys. Yeah, cool. Thanks, brother. So for just a minute and a half, we had some buyers. Raised price up to 6.5. The sellers stepped in. Okay. This is how you get some tactical information about where the sell orders are, where the buy orders are. You don't need any fancy software. You don't need any special algorithms. Nothing. It's very simple, right? You just mark where the sellers are on the candle chart. So when you're long, you know where to get out, right? Thanks, guys. Yeah, Moran's probably just your, it's probably something in your settings or your connection. It's weird. Oh, chopping around a little bit now. Okay. Yeah, I don't know. I mean, I'm not a tech guy, so I don't know how YouTube works. I imagine there's a ton of traffic on it. So I remember last week, one of the banks in the UK had some issues with their internet banking, and I had to go into the branch, and the lady was like, "Oh, we're so sorry," expecting me to be mad. I'm like, you know what? I'm from the 90s. I'm used to dial-up internet. I'm surprised that any of this stuff actually works. So, you know, it's okay. Now it's a little choppy here, right? So if you're long, right? Say you're buying the twos, right? I tried to buy two. I tried to buy 2 3/4, and tried to buy 3 3/4. Every time I put in a bid, it ran away from me. That's why scalping is really good. I tried to buy three different price levels. When I saw that do the look below and fail of 7,400, and as soon as I put my bids in, boom, then I moved I was just clicking in trying to get product, couldn't, right? So that tells you something, right? And if you're not scalping, then you don't understand how this works because you're not sitting there trying to buy. When you put a buy order in and the market runs away from you, then you know that what? That there are people who are trying to buy ahead of you, right? So there's competition. When there's competition, right, and you can't get product quickly enough, then you know that you've got to move your price up or wait until the market comes down, right? This gives you tactical knowledge, right? And traders need to have tactical knowledge, right? Otherwise, when you go to put on a big position and you don't know where the buyers and the sellers are, you're completely blind. right? See, now you can see that there's a seller at 5. We're underneath that 3 where the sellers were, and then it turned into support. Does it look underneath and come back up? Let's see what happens when the next candle opens. I'd be looking for 7,400 and 3/4 again. Right, if it doesn't get down there, then you can go long and you know to sell in the 4s, right? Here it comes, right? The overnight is respecting that position in the last couple of hours from yesterday, right? So if you are buying, see how there's a seller? As soon as we got there, boom, the seller stepped in, right? So this gives you a tactical advantage that traders now do not have. If you know the tops of the candles are getting lower, you wait to buy. You don't chase price because you know the sellers are putting it on sale, right? VWAP is down here at 98. So for the last, I'd say 20 minutes, they're front running VWAP. That's why when we dip underneath 7,400, we do this. See that? So if you want to be a buyer, right, and you know that there's sellers here, say you bought 74.04 or 3 3/4, go and throw your sell orders out. Make sure you have your sell orders out. So if this thing catches a bid and rips, you know you're going to get filled, right? Now it's a tight range. We're working between 3 and 5. Not a lot of meat on the bone, right? But if you see it, watch, right? And you know there's sellers at 4/4, you know there's sellers at 5, right? They kind of stop selling at 2. So that's not really tradable right now. So what you're looking for is the look below and fail rip right now. Why are you not looking for a short? Because right now they're currently front running VWAP. See? Everything we do is tactical. Everything we do is common sense. That's what we do at the Trading Syndicate. We take normal people and we educate them on how to trade with common sense. So you're not, so I'm long 3. I'm selling 5 1/4, right? I've got some offers at 5.5. I got 4 contracts left. I'm long 3. I'm selling 6.5. I'm selling 6. I will sell everything into this move because I know there's going to be sellers. I am flat. So here I bought the 3s when it came back up. And as soon as I bought those 3s, I'm selling. I'm selling. I'm selling. Right? You guys understand how that trade worked out, right? I'm not thinking short because I see the bid here, I see the bid here, I see the bid here. And the offer is raising. So when it comes down, you get a little discount. You put your stop here, right? I bought the 3s, I bought a few contracts, threw my stop under 2, and immediately sold them because look, it went right to where we said it was going to go, right? So you buy the 3s, you sell the 5s and the 6s. You're not looking for 8, 9, 10, right? Because unless you get a big buy order and the book flattens out and just boom, it rips, you're asking for, you're using luck. And hope. This way you're not hoping that the trade works, right? Your risk is 2, you're long 3. So your risk is 4 ticks, maybe 5. And as soon as you're long, you put your sell orders out, right? So you get in line to sell right away. As soon as you buy your position, you're a seller. You don't sit around and wait. You don't sit around and wait with your thumb up your nose, hoping that the thing's going to go to 13. It may, but right now you can see clearly that there's a seller at 7 3/4. Now, if you have a larger account, you would put sell orders at 8 1/4, 9 1/4, right, all the way up, because you know for sure that there's going to be a seller here, right? Right? You buy the threes, your stop is here, and you sell into strength. The strength that is created by a lack of supply. Right? Very simple. This is not rocket science. The execution is difficult because you have to train yourself to execute. Execution is just something that we are not naturally born with, right? It's not an innate skill. Execution is like flying a plane. It is a skill that has to be developed with practice and time and discipline, right? So if you're flying a plane and things aren't going right, you're not going to just deliberately crash the plane into the mountain, right? So that's why we train ourselves in execution once you understand how the business works. And that's what we're going to do in our markets. We're going to teach you how the business works, okay? And then how to actually take advantage of it in an intelligent way. So you're not fumbling around. So you're not hoping and wishing. So you're not taking trades because you're bored, because you fear that you're not going to make any money, so you take a trade and lose all your money. Right? So everything you do is based on common sense business. There you go, right up to 11, right? Finally ran out of supply, reached up to 11. Did I sell the 11s? No, because I ran out of product at 6, 6.5. But I'll take 3 points on 5, 6 contracts, right? Perfectly happy for that, right? Because then you earn a living. And I'm done trading now, right? I have to go to the dentist in 10 minutes, so I'm done for right now, right? Hey, folks on YouTube, hope you guys are doing well. So, now, everyone was expecting the market to sell off, right? In the overnight session, it did just briefly, right? There was some more war stuff, missile strikes, yada, yada. So, but this market is now up. Why is it up? Because they are disposing of the inventory they bought on Friday, because Friday was a liquidation break. How many trades have you made this morning? One. Just one. If you rewind the YouTube, you'll hear me call out the trade. Long 74.03, out 74.06. On like 6 contracts. All you need is one. All you need is one that works. Any other questions? Ah, new contract volume. Good, good. Do I take small scalps or swing? I'm a scalper. I like scalping. I'm not a swing trader. I don't like to put up 24 grand a contract. My clients do swing, right? So, they'll short and hold or go long and hold on the look below and fail. I have institutional clients that are trading hundreds of millions who use my methods and my levels. So, what are you trying to figure out or justify? What are you trying to figure out? What I teach you to do on scalping will work on swing trading as well. So say you got 20 million bucks in your account or a $50 million account and you want to hold trades overnight and put up $24,000 per contract, right? So one of the trades we did was for my clients was back here. We did the look below and fail of 73.91 all the way back up to 76.31. We did the look above and fail of 76.31 all the way down to 75.40. And some of my guys stayed short all the way down to 73.91. My levels work to a tick. So what I do is I teach you, because retail traders, there's no way in hell that you're going to make 100, 200 grand trading, right? You're lucky if you make 50 bucks and keep it, okay? So what I do is I try and teach retail traders the methodology which they can then expand as they build skill. So I've been trading for 34 years and I've taken 200 companies public, right? So I'm a size trader. Okay, well, if you're trying to turn profitable, forget about swing trading. You better learn how to scalp so you learn how to think and act quickly, right? So if you're not profitable and you lose all your profits in 4 months, right? It means you don't understand what the hell you're doing. Come into our trading room for a month and I'll teach you, right? I'll teach you how to make money and keep it, right? Thank you. I appreciate that. What my goal is I want to teach normal people how to make a living. I want to teach you how to make 100, 200, 300, $500 a day, but I want to teach you how to keep it. Because where I come from, I grew up in this business, right? I started in this business in my 20s. I'm 58 now. And the concept of losing all the money that you've made, that is not normal in the brokerage business. That is not a normal thing. What they've done is they've taken this trading thing and they've prostituted it to keep people running around in circles to take their money. So what I will do is I'll teach you how to run a proper business. If you know how to run a proper business, like see, if you were profitable for 4 or 5 months, there's no way in hell you should have lost it all, right? As soon as you had 4 or 5, every week you should be taking money out of your account. You shouldn't be trying to grow your account, right? If you make money in a month, get it the hell out of your brokerage account. Put it somewhere where your ego and your lack of skill cannot get hands on it, right? Brokerage accounts are meant to wire money out of, not into, right? The concept of blowing up an account and losing a lot of money, that is not a normal business practice where I come from. It would be like Goldman Sachs saying, okay, we're hiring you, right? We're hiring you, and okay, you're going to blow up our company tomorrow, and then we're going to rebuild the company and start again. That's not how business works. I use a retail broker. I use Amp and Iron Beam, right? Right? I'm not trading hundreds of thousands of dollars in and out. My maximum position size is on the E-minis. Maybe for some of my larger clients, I'll trade maybe 20 to 30 contracts. If I'm really, really, if my analysis and my execution is good, I might do 50. But that's very rare, right? And I got to be dialed in because if I'm putting 50 contracts on the line for some of my clients, I better know what I'm doing. I'm a big believer in not losing money. I've never blown up an account, ever. Right? I'm an institutional trader that has learned how to trade retail, and I use the business knowledge I have to try and teach retail traders how to stop the cycle of losing money consistently, right? So if you're long 74.11 right now, you should be selling before 19, right? If you can't make $50 a day and keep it for 3 months, you should not be trying to size up. Everybody gets into this thinking that, oh, this is easy and you're going to make your rent and blah, 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 and they just blow themselves up over and over. Then they go to trading psychology. And there's no trading psychology in the world that is going to adapt or is going to teach you how to trade. You might have the greatest trading psychology in the world, but if you don't know what you're doing, you're going to lose money, right? Gain some knowledge, gain some skill. This is a skill business. You have to learn the skill of how to trade. You have to learn the skill of how to manage risk, right? It's not complicated, but it takes discipline and time and repetition, right? Yeah, so I'm a retail trader now. I trade some big accounts for some of my old clients, right? But you know, I don't use a prime broker, right? I'm not managing 100, $200 million. I'm just a regular Joe. But I know what I'm doing, and I don't lose money, and I don't blow up accounts. Now, of course, you lose money when you take bad trades, you get stopped out. That's the cost of doing business. But in business, your business costs have to be less than your revenue, right? Otherwise, the business model doesn't work, right? You guys with me? Right? Your business expenses have to be less than your revenue in order to make a profit. If you think about trading, right? That's all it is. Yeah, join us. I mean, we're only like $40 a month, right? We are the cheapest trading room out there. That also gives you an AI component that's been trained on my stuff. So you will learn how to trade, right? We AI, we're only charging like, the basic room is $15 and the premium membership is $50 a month. You can't lose money, right? Try the $14 one. See if you like it. There's no commitment fees or anything. It's $14. It's like 2 cups of coffee, right? There's your 19 seller, right? So overnight inventory is long. We had a little correction and we keep finding buyers, right? Why are we finding buyers? Sorry, Raj. So the new contract has 5,900 contracts. The old one has 207. The new contract is about 60 points higher. Okay? So people are, the shorts are coming in and doing some nice covering before the rollover. Now, rollover will be probably Monday, right? So as this week progresses, what's going to happen is the volume from the old contract will start going down and the new contract volume will start increasing, right? As the old contracts come to expiration, the volume in the new will start overtaking the old. But until then, you're going to be splitting volume between two ES contracts. So there will be some times where it's choppy and slow. But after Friday's liquidation, you can see that the trades are much better now, right? A good liquidation is really nice because what it does is it greases the wheels, right? Nice liquidation here, right, on the daily. So inventory was trapped long above 75.44. Liquidate, right? Grab that cheap inventory, go sell. Am I bullish? I don't use that term, right? I'm tactical. So if I see that sellers are raising prices, then I'm a buyer. If I see sellers are lowering prices, then I'm a seller. Does that make sense? I don't use bullish, bearish, raccoonish, squirrelish, rabbitish, all that shit. That's all fancy bullshit talk that that confuses traders, right? How do I see that? I'll teach you. If I could show you a way to make some money in this market while managing your risk and getting rid of all this shit like bullish and bearish and all gaps fill and the rain in Spain falls gently on the plain. All these stupid euphemisms that are tossed around this market by people who don't know their ass from a hole in the ground, right? How do you know that price won't go down? You don't. That's why I teach you how to scalp. So if you could make 300 bucks in less than a minute and a half and be done for the day, is that something that interests you? If you could make a little bit of money in a 5-minute span and stop, right? Are you interested in making money? I will teach you how to do so, right? I would, yeah, if you're just joining us, I am a scalper, right? Yeah, then come check us out at Trading Syndicate. We'll teach you, right? But here's the thing, R Gardens. What I will teach you in scalping, you can use once you acquire some skill and some money. So what I teach you, the techniques that I teach you, and the business that I teach you is scalable, right? You're the Man United guy? Okay. So we teach you how to make 50, 100 bucks a day and keep it. Okay? That's the first step. Then once you become consistently profitable and you don't do any dumbass things like blowing up your account, we start increasing your size. Right? And as soon as you start making stupid mistakes, we scale you down again. Right? So there is a method to my madness. Right? So unlike other trading rooms who try and sell you a method or this, what I do is I teach you the business, right? That's all I do. So now, I believe it is tomorrow will be the first episode of our new podcast, Proper Villains, which is based on my book that's coming out. And I'll show you how smart money works, right? So you guys have all, seen The Wolf of Wall Street, and everybody thinks that's a great movie. That guy's a joke, right? He made money, he put it all up his nose. He was a drug addict who got lucky. My clients made billions of dollars, and guess what? They still have it. And you'd walk by them on the street, you'd never even know it. So if you want to learn how smart money, the money who always makes money, the money who never loses in the market, if you want to learn when you're buying a stock at 50 bucks a share or at $5 a share, if you want to know who's selling it to you, who got it for less than a penny, the Wolf of Wall Street wasn't a trader. He was a degenerate drug addict salesman. He's not a trader. Couldn't trade his way out of a wet paper bag. He's a salesman, right? They did lines of coke and they got poor innocent people to buy crappy shitty stock by using high pressure sales tactics. That's not a trader. That is a broker. And then he went to jail. Right? So he's not somebody that I look up to. In fact, in my circles, he's a joke. right? He's a joke, and he is a story of how if you can't handle yourself, this is what becomes of you, right? It's not glamorous to make that kind of money, punch your wife in the stomach, and lose all your money, right? The guy's a joke, right? But people love that whole thing, right? He's a joke, right? Let me teach you how people who make billions of dollars keep it, right? We'll teach you the business, and we'll start you making enough money that you can pay your bills, right? Yeah, just people think, oh yeah, I got high on drugs and wrecked a Lamborghini. Well, any idiot can do that, right? The one thing he was good at was getting people to follow him, right? And all he did was flash some money. I mean, the 80s and the 90s were like people were very, very easily suckered. Right? Yeah, there's a seller at 23. There's single prints here, right? So anyway, that's pretty much it, folks, right? Yeah, now Paul Tudor Jones, that is a real businessman, right? Hang on one sec. Hello? Okay, folks, gotta hop. I will see you at 9:30. Have a great day. Bye for now.